Good morning, everybody. How's everybody doing today? Let's go check the market. It's up last time I checked, but it was selling off kind of at a key level. All right, so here we go. I think this 612 levels are very important. This morning we got a little bit higher than that, but we went exactly, it looks like exactly to the tick, basically, where we went last Thursday after NVIDIA earnings. That day we gapped up big. I guess NVIDIA earnings were Wednesday night. Then we gapped up and then fell. Anyway, it looks like we stopped right almost to the tick where we did. But now these are 30-minute bars. That was the first candle right there. We're drawing the second candle now. Hopefully bulls can get this thing up into this area. And the next target would be 621 or something like that, 617. And eventually on to 631, and one day at a time though. One day at a time. So that's the cues. Let's look at the SPY. Let's see if the SPY stopped at the same place also. Now the SPY is a little bit ahead of where it was last Thursday. You can see we passed the last Thursday high in the SPY yesterday, left behind a bullish gap this morning. There was a small gap in the cues also. We'll see if that holds to the end of the day. That'd be a good sign also. All right, so that's the SPY. Now let's check Bitcoin. Now, Bitcoin, on the other hand, is I was trying to see where their high from last Wednesday was, but Tuesday, Monday. Well, this is a 24-hour chart. So their high from last Wednesday was right here, I believe, or last Thursday morning. Okay. So Bitcoin's well under that level still, but still Bitcoin's doing better. Looks like it's pretty comfortable trading in this 87,000 range. We've established a trading range there and building out a point of control. So come on, bulls. Bulls really want to get it through this area and eventually on up to 95. But I guess the first stop would be to take back the point of control at 91. All right, so let's look at some other stuff. Here is the diversified divas. Now this, I pulled this a few minutes ago. I guess maybe we should just look at the source material. All right, daily percent change. So this is updated. So you can see the day starting off, it looks better than yesterday. Not quite as good as Monday, of course, but that's fine. This early in the day, look at K yield up 2.3. Heck yeah. ULTY up 0.5 point. We'll take it. Blocks up 1.4. ULTI down a little bit, but it's early in the day. Everything else is up. The Qs are up. Of course, we looked at the Qs in the SPY. They're up a little bit. QLDY is up 59 basis points, and the Qs are up 65, keeping up with that upside. All right, so now let's check on a cumulative rolling total return basis. This is improving. This is vastly improved. ULTI from Rex is only down about 30 at this point. Blocks is only down 22, and this is for the month of November. ULTI from YieldMax is down 14, and K yield is down less than 10 at this point, down 9.95. So K yield's doing the best out of the four. I've just released my recorded a show this morning on these four, and I talked about their option trades and stuff, but we can look at that really quick. ULTY from YieldMax put in some more blue chips into their stock positions. They added Palantir, Facebook, or the blue chips they have are Palantir, Facebook, Google, Eli Lilly, IBM, American Express is on here, Morgan Stanley, Lam Research. Anyway, you can see that ULTY has significantly changed around their portfolio. Their option positions look standard. They're doing collars still on everything. Some collars are 3 legs, some are 4 legs, and the blue chip ones they're using a 3-leg collar to get a little bit of extra yield out of it. But in the high volatility ones, like say for instance, Coinbase, they're just using the standard 2-leg collar, sell a call, buy a put. It has enough volatility by itself. They don't need to sell an extra option, but it's something like Eli Lilly where it's not all that volatile. They sell a call and sell a put, and then they buy an out of the money put. So they have cap downside on all their holdings. ULTI today, all of their downsides are limited also. Sometimes they're switching over to some different kinds of collars, but they have on some type of collar in all their strategy, meaning they have defined risk on the downside. They're selling premium, but they have defined risk on the downside. All right, so that's pretty much all you missed from the morning report. But back to this spreadsheet. This is as of a few minutes ago. Is as of about 15 minutes ago. But in any event, we've already looked at that. So now let's look at the buffer report, the index. Let's look at the index buffer report. I thought it was up. We'll pull it up. All right, so feed and 5E every day. They're up the most today. We have one oddball that's down. It's WDTE from Defiance. Q up is up, but it's getting delisted, so I'm probably going to take that off of here. It should have never been on here because it doesn't pay a yield. I was just interested in what they're doing. All right, well, but I guess I was the only one, no one else, and I didn't even buy any, so no one bought any. So you can't just be interested in ETF. The whole idea is you have to buy a product for it to be successful, and I guess that one was not successful. It just could not compete with direction, with the TQQQs. People that want this kind of ETF, they just go to direction and buy the TQQQs. All right, in NASDAQ land, what's up the most? It's blocks, of course. Heck yeah, blocks, 2.3%. LFGY is even up 1.1. That's good. Probably SEPI and FEPI over here. Yep, SEPI's up. That's good, as is FEPI. Those are 2 good ones. But also don't forget about WPAY's up nearly a point. YMAX is up. That's a good one as well. It's showing ULTY down at this point in the day. My other graphic wasn't showing it down. I don't know what's going on. That graphic's probably wrong. No, it is indeed down 1.2 according to TradingView. Also, how did that happen? It looks like it's up right here. How could that be down? Oh, because it's X, and this hasn't factored in the X dividend yet. Okay, well, on the diversified divas, of course I do. You have to factor in the dividend. And for instance, let me show you. ULTY, so total return, stock return. ULTY paid, or K-Yield paid a dividend today, 16.5. ULTY paid $5.95, nearly 6 cents. So, yeah, ULTY, when you factor in the dividend, is actually up 0.5 point. Okay, that explains the discrepancy. That explains why some of the charts had it up and some of them had it down. Well, it's really up. The charts that have it down are wrong. The charts that have it down are wrong. Hey, Fish, how are you doing? Hey, Chad's here. Fish is here. Marcus is here. Ethan is here. Ethan's in the house. Okay, Fish, what are you saying? You forgot to add HO2, not following the underline, as well as HOOW, but the latest dividend was low. And HOOW does have low dividends and pullbacks because they aren't selling options. They're using total return swaps. That could be a good thing too, because if you don't really want to pay a lot when the stock's pulling back, because it magnifies the problems that these stocks have. All right. Hey, Mark. Yeah, but I thought that was a good show last night when we started looking at Portfolio Visualizer, and we were trying to measure Tesla versus Tesla crash and Tesla in a portfolio altogether. I thought that was pretty fun. All right, so let's see what else is going on. We're going to look at all that right now, Red. That you reminded me. Let's just go look at everything and see what's going on. All right, let's get it over here where you guys can see it. This is what I was trying to show. Okay. All right, man, look at this winner. Gosh darn it. That's for the month, though. 41% for the month. They say these high yield funds can't catch upside. And while it's true they can't catch upside, the inverse ones are sure catching upside. I'm just joking. All right, I have no idea why that's doing that. Let's look at the daily results. I was thinking, Fish, that the HOO2 and HOOW might be on the daily results, and we could look at them here. But didn't we talk about that last night? Wasn't the thing, well, we'll look at it here. So yeah, HOOW is the big winner of the day. Wow. Where's HOO2? Not even on here? What's going on, HOO2? All right, well, let's just look at it this way. HOOW up 8.5, beating the parent, of course, because it has leverage, but YieldMax is getting in on the action too. Huey's up 4.09, underperforming the parent, but that's what we expect with YieldMax. And I don't know where HO2 is. But yeah, you were saying HO2 doesn't follow the parent as well. I'm trying to think. Didn't we talk about that last night? And the thing is, the REC strategy is bad in a bear market, or bad when the market's pulling back, because it only has half of options are good in a down market because they add buffer. And so REX is only selling options on half the portfolio. The other half of the portfolio is unencumbered by options. But in a bear market, it means it's just free to drop as much as the stock does, and it has a little bit of leverage. So it's kind of a double whammy against. But in a market that's up like it is today, I would expect, there's HOYY. In a market that's up like it is today, I would expect this to be a good situation for HO2. Huh. Well, let's just look at it this way, I guess. This is showing up 4.79. It's just not, look at it, huge gap up. It's just not, for some reason, that graphic It's just not either. I didn't see it, or for some reason it didn't make the graphic. They usually tell you up at the top. Yeah, right here, ETF tracker. It says market data unavailable for these two, but it doesn't say HOO2. It's just not on there, but it's up 4 point something. It should be right. It should be right here between NV2 and HOOYY. Yeah, I don't know why it's doing that, but it should be there. All right. The HO2 dividend was low. Okay, I'm sorry. And HOW had a good dividend. Okay, I got you. So the last dividend on W was 78.69, which is pretty good on it. Yeah, that is pretty good on a $55 ETF. That's especially for a weekly dividend. Yeah, that's really good. Okay. Yeah, HOW is definitely killing it today. And two's only been out for a few weeks, so it's not going to make my report, but usually I mean, I would expect it to be on Stock Tools. Maybe he just hasn't had a chance to add it to Stock Tools yet. In any event, it's doing well. I mean, I'm sorry the dividend was low, but the price action it would be third if it was on here at this point in the day. All right, you missed your order on NV2 by one. Oh, that's frustrating, and it's up today. Don't you hate that? All right, let's look at the 1 week results. Now, this week we've turned stuff around a lot, so let's see what's going on the 1 week result for these things. Yeah, I guess that's true. HO2 hasn't been out on Rex that long. They've had NV2 and TS2 and MS2 and all those, but yeah, that's a newer addition to that crew. Maybe Rob just hasn't put it on, Stock Tools yet. Boy, it's been a great week for Broadcom and GOOW, Facebook, Carvana, DraftKings, Google. I mean, you have Google on here through Goop and GUI and GOOW. Yeah, the W funds kill it on they beat them all on an up day. Really glad that I got WPay. HOW, there that is on the week. TS2 is having a good week, as is TSLP. Oh, IQQQ is getting in on the action. I never talk about those. IQQQ, we did a little bit last night on the show. Those ones from ProShares, IQQQ and iSpy. TSYY is getting in on the action. Even old GPIX is up 2.1. Heck yeah. All right, I like to see everything bouncing. I definitely like to see everything bouncing. I wish you would have got your order in yesterday on NV2. Maybe you'll get another chance later on, but this action's been pretty bullish. Just having a hard time seeing that screen today for some reason. Heck yeah. We just need this area right here. The reason I put this yellow line right here is because it capped. It was a real solid cap, and several times, 5 times there's a real solid cap. If we get up into this structure, this structure up here to be with these two gaps, this is like the bull trap structure or whatever. This was the trap area. Once we fell out of this balance, then we had to go down and test lower areas. But if we get back into this, hopefully we can. Well, look, and I just now noticed this. I need to get new colors for these lines. I can't see them that well. You can see them all right on this screen, but in real life, I can't see them. But anyway, yeah, we took back this descending trend line. So heck yeah, that's awesome. Okay, so in the Qs, I don't have to turn it red because you guys can see it, but I'll turn it red anyway, just so I remember. In the Qs, we're just a little bit below that descending trend line. Heck yeah. I like what I'm seeing, guys. I like what I'm seeing. All right. You have NV2 already. You were just trying to get a few more shares. I hear you. I hear you. So look at blocks. Have we talked about their positions today? They haven't. They didn't make any changes. I finally have this where it's telling me if there's changes. They added a little cash. I mean, but they didn't have any changes. So it's the usual suspects. It's the usual suspects. But then they're on their option positions. They're doing put spreads on everything. Plus they have stocks. That's a lightning spread. Except they're doing call spreads on the ETFs, ETHA, which is Ethereum, and FBTC, which is Fidelity Bitcoin Trust. And then on HODL, which is the Van Eck Bitcoin Trust, they just don't have anything on. They're straight long on HODL, which is another reason why they have great, performance on up days, because they have 15% of their portfolio unencumbered by anything, and then these two, 15% and 9% have call spreads, and the rest are also pretty much unencumbered because they have put spreads. You're up 28%. Heck yeah. Heck yeah. All right, Andrew, you got some GX and some K yield, QLDY, and you're trying out XXV. Great job. Cool. Do any of you other guys have XXV? I think there was one other person that was either going to get it or got it. Now GX changed everything around last night, and I don't know much about GX. I don't have any. It's nothing that I've really followed that closely for some reason. When it comes to X funds, I just think blocks that's the goal. I've just kind of always ignored GX and FIAX just because I don't know. But anyway, they basically bloxified GX. I have the trades right here. We can look at those. They're right here. I just saw them. Well, actually, I think I closed it. I had a spreadsheet open. But anyway, downloads. Well, right there it is, but hang on, it'll be my history. Yeah, untitled spreadsheet. So here's all the GX positions. And we looked at these last night on the show a little bit, but they've just bloxified it. See this negative 76 and positive 76? Those are both put spreads. So they have stock in Broadcom, plus they sold puts at the whatever, I'm having a hard time seeing today, at the 370 level. They bought puts at the 360 level. That brings in a credit. That's how they're going to pay the yield on this thing. And also they went to weekly, so that'll make it a lot more popular. They went to weekly and switched to put spread. So I would expect a lot better upside NAV performance with the way their options are structured. But I would also expect worse. I didn't really used to watch it, but compared to standard covered calls, they're probably going to get slightly worse downside performance also. But yeah, they've uncapped the upside on GX and switched it to weeklies. So yeah, I think that's a good thing. I don't know if that's why you bought it or if you bought it because it went to weeklies or whatever, but let's see what you're saying, Andrew. Oh, you sold it before because the price erosion. I got you. Hopefully the new strategy works. You got a notification about it going to weekly. Yeah. So like I say, the new strategy will work as long as the market goes up. It's going to be a lot more like blocks, in my opinion. And, we can see that. Weren't we looking last night? In fact, let's go back to that. I was looking at something last night in Stock Tools, and I was on the wrong screen, and I didn't show it to you guys. But check this out. This is a really good look for blocks. So I'm going to try to recreate what I was looking at last night. So we're just going to go to the Bitcoin ETF comparison, and then we're going to go to, I think it was it was 3 monthly. Anyway, but blocks was leading on this. Yeah, there it is. Last night it was down like 6.05. Now it's down 5.33 because it's up today. But look at this on a 3-month basis out of all these, and nothing's doing well in this sector. I mean, even the blue chip Bitcoin ones, it's been a bad quarter for Bitcoin. I mean, that's part of the reason why ULTY is sucking lately. And it's all of the reason why LFGY and blocks is sucking. But when you look at all of these together, even including Coney, YBIT, BCCC, it doesn't matter. Blocks is the best performing one. And that's interesting because blocks actually on a down day goes down way worse than all these other ones, way worse. But the market has up days and down days. And on up days, it goes up way more. And if you step back and look at it on a 3-month basis, it's actually doing the best. So I'm hoping that will be the case with GX too. I think it'll do worse on down days. I mean, just because of the structure, but it'll do better on up days, and hopefully the aggregate, it will do better like blocks has. But that's damn impressive on blocks. Now let's look for 1 month and see. I guess this was what wasn't working last night. The 1 month chart wasn't working. Yeah, but the 3-month chart, and I said I talked about it last night, but I wanted to show you guys. Anyway, let's look at a 1 week chart in the Bitcoin complex. That's not working either. And the 1 day chart. Okay, the 1 day chart's working. So let's go. I bet blocks is leading this also. Nope, it's actually Coney. And then blocks is number 2. Then BITX, which I have right there, is number 3. Yeah, so I mean, GX is more to my liking. I'm just going to say that. I don't know, Andrew, if it's going to be more to your liking. So Mark is saying the erosion wasn't all that bad, but you appreciate the strategy change. Wasn't it more like an underperformance problem wasn't it that it was only up 6% in a huge bull market or something? I thought that was what we finally decided last night. All right. Mayor has a question. When you compare funds in the same theme, let's say one's 5-year performance is better, the other's year to date is way better, which one do you pick? Well, that's a good. So I don't think any of my stuff even looks at 5 years because none of these things have been out 5 years. The ones that I follow, we're lucky to have a year on these. But I hear you though, because I look at these. I do look at these on a quarterly basis in the max factor and on a yearly basis. But I don't go about 5 years. But yeah, so I do that in the max factor. The max factor is actually working today. It hasn't been working for a while. We can look at that. To tell you the truth, for trading, I look at the 3 month because the yearly is too slow to change or whatever. But now the yearly, it depends on what you're looking for. It depends if you're trying to allocate for the long term. You probably want to look at longer term ones. I like to focus on the 3 month, the quarterly, because I'm trying to because I change my allocations about once a quarter. In the model portfolio, I changed at the end of October. I still have a little bit more cash that I need to invest. But basically, I made the big changes at the end of October. Then I made big changes this summer in like July. And then in April, when the market went down, I reallocated. So I tried to reallocate it no more than quarterly. My last big allocation is December. That's unless I buy something with the cash I have right now. So that's a long way of saying I look at the shorter term performance. But I look at both of them, but to allocate for what I'm doing, the shorter term works better for me, Mayor. It may not for you. We got John in the house. Hey, John, how you doing? John's here. Ethan's here. ULTY is doing, you're happy with ULTY? Heck yeah. The whole market's turned around. Hey, yeah. Happy Green Day, retire. Happy almost. First of all, does anyone know if there's a Wolf Spaces today? I guess I could look it up on X, but I was hoping one of you guys would know. But maybe someone will know and put it in the comments. 12. Okay, I'm going to go listen to that after this. And that's in an hour from now because it's 11:05 where I'm at. It's 10:05 where I'm at, but whatever. So yeah, I'm going to definitely listen to that after we leave here. But then the market closes. After that, the market's basically closed. Doesn't the market close at like 1 today? Futures and stuff will probably be open because it's not because but I think the cash market closes. I think the cash market closes. Yeah, but John here is a fellow Texan, and but so is Chad. We got 2 Texans in the house that I know of. We have more also. All right, Froggy, what are you saying? Froggy's saying you would look at what bounced back better from April. Yeah, that's a great idea. And we do that a bunch. I mean, we're always looking at the chart out. Has this one recovered its March high yet? So, okay, so comparing DBA to Moo, you wanted an agriculture fund, Moo's tickers, yeah. But the DBA on 5 years a lot better. Heck yeah. Are any of you other guys going to listen to the Wolf Financial Spaces? I love that. I love that content because just because I like to hear what Josh and Mike Coe are saying, it helps me think of ideas for content. But if there wasn't for that Wolf Spaces content, I would have to go listen to other creators' videos. And other than Rod, I don't listen to many other creators' videos, especially when they have on Mike Coe, because I already know what he's going to say. But I like the Wolf Spaces because it's not a whole video. He may speak for 10 or 15 minutes. So yeah, I'm going to definitely go there and try to get ideas for new content. I want to keep making alt-Y content. I have some content, but I just don't know if it's too negative. I have a future value calculator that will tell you when alt-Y is going to split again. I don't want people to think I hate alt-Y, but at the same time, I'm trying to warn people that think alt-Y is a growth stock, that it isn't. I mean, that's why I made that content. Let's get serious about alt-Y. But then also I still have it and I like it just fine. And then I always feel kind of like a hypocrite, but I have I'm not trying to live off it. And I like it because it's like a hedge fund in a box. Anyway, but yeah, that Wolf Spaces is awesome. And even if you don't jump on, we'll be in the show tonight at 3:00. I'll be talking about what they said on there and I'll probably make some content on it. Hey, Dan's in the house. Yes, I watched that and I subscribed to ETF Delta's content, and I'm trying to kind of copy him. I mean, here's my version of that. I like things that are quicker. So I make this every morning and I have my own content, but here's the alt-Y holdings analysis. These are their holdings and these are their changes. And so look at all this stuff. They added Palantir, Robinhood, VanEck. I thought they had Palantir before, but whatever. And I know they had GDX. They had GDX yesterday. So my AI is just still not great yet, but I know that some of these are brand new. American Express is definitely brand new. Eli Lilly's brand new. There's ones that I know are brand new, but anyway, this is better than the content I had. They dropped Astera, IREN, and Affirm. So yes, it looks to me like they're de-risking a little bit or a lot, and they're adding uncorrelated assets. But yeah, I subscribe to that. And in fact, here it is. I'm trying to make my own thing so I don't have to just go to his. My thing sucks. See, it says new positions, Broadcom, American Express, but those other ones weren't new positions. I don't know why my AI can't get it right. My AI was saying that GDX is a new position. I know it wasn't. But anyway, yeah, this report's so good. He said I could quote from it anytime I wanted. He said other people are free to use it for your research, but I just feel like, I want to do my own stuff anyway, like I say, I know this sucks, but I'm working on it. I think this content is good. I'm trying to make something out of the diversified. I'm trying to make this dashboard right here with QLDY, ULTI, ULTY, and blocks have combine it with this. Have this information with this look and on this dashboard. And I worked on it all morning and they just can't, this freaking AI can't get it right. I told him to make so check this out. Oh no, never mind. Check this out. We almost got there this morning. I got up like at 6:00. I fell asleep early and I got up and I tried to work on this forever. We were just having all kinds of problems with it. Let me show you what I'm showing. Well, let me show you what it's going to look like if they can ever get if AI can ever get its act together. Well, now it says we've reached the conversation limit, but gosh damn it. All right. So this is what I'm trying to do. So I got this morning, and this I'm trying to make it all in one thing where it's attractive to look at. And the performance tracker is that other thing I just showed you, the interactive, what I call the diversified divas, and you click on it. But I want it all to be part of the same thing. But yeah, I'm trying to make a report that has all 4 of these with the stocks, with everything, but it's just not working out. And I mean, not yet anyway, but I'll keep working on it. Yeah. But until then, I can just read this because this is really good. He's a really talented dude. I do not have ADX in the max factor. I love ADX. I love ADX. I'm trying to think. I love technical indicators. Or I thought you're talking the EDF advanced. You're talking ADX, the ETF. Okay. I thought we were talking, check this out. There's an ADX here. That's a good technical indicator. I mean, that's what I thought you were talking about. It's a momentum indicator. I use it all the time. All right, ADX. Well, you mean Adams? Oh, I've heard of this one before. Yeah, I've heard of this one. Sure, but no, I don't. Well, I think we talked about it before. Maybe you brought it up. But let me show. Let's look at something real quick here. But every time I take one step forward, like where on that one sheet where it now shows the changes. And I'm so happy it does that, but it doesn't do it right. It's 1 step forward, 2 steps back. I mean, and then I could work on that stuff all day, but then I'd never get any new videos made. All right. So ADX, yeah, I mean, it pays enough to be on there. I'll get it on there. We'll put it on right now. But I don't know why AI just can't do it the way I tell them to and do it right. I mean, then the whole reason I have that is for the morning show. But before I meet with you guys, I do a show, but that show sucks. No one watches it. I wouldn't watch it either. But I'm trying to make a show that just looks at those 4 and the diversified divas and everything from yesterday. And I did it this morning, but I mean, it sucks. All right. ADX is now a part of the max factor. Let's make sure it loads. There we have it. Let's see what the inception date is. Yeah. 1972. Look at that. But I know I've researched it. It was around since the 30s under a different name or something. But yeah, that's amazing. Or since the 40s, I think. I mean, anyway, it's on here. Yeah, 8.2%. It's gone from 20. It has stable NAV. Heck yeah. Heck yeah. Let's look at its sustainability score. Sustainability is this one. So sustainability score is 1.4. So let's go to the other max factor. Let's see where that would put it on the max factor. 1.4. It's not on this sheet because I already downloaded this morning, but it would be right. It'd be right here between GPIQ and IVVW. Heck yeah. Well, it'll be on new max factor reports. That's a good tip. That's a good tip, Mayor. Thanks for reminding me of that. All right. Let's see. Yeah, it does seem like, I think what they did with ULTY is good. They're just turning it into, if you want something like that, though, just go by GPTY. GPTY beats everything out there that people think is safe. It beats T-SPY, it beats everything. It beats triple QI, it beats them all, and it beats them on yield also. It's the best yield max one, best performing yield max one out there. But they basically, when they're, now Lilly isn't in GPTY, and neither is American Express, but they're just GPTYing they're just turning ULTY into something it isn't. But yeah, I mean, as long as it performs better, that's fine. All right, so Adams is in there, a good tip. Funny because that was never not the case. It's just the lesson learned from the ultra high yield. Yeah, good call. That's true. Froggy feels like so many funds and ETFs having a high correlation to crypto, we're going to have more swings. Absolutely. Max, just FYI, the longer the conversation thread is. Yeah, I know it. And I usually start new threads. Claude came out with an update yesterday. But the problem with that, Froggy, is sometimes sometimes I'm not finished talking about something. It says you have to start a new conversation. And it makes me mad because I do go start a new conversation, but they are, and I say, I want to pick up where we left off on the old one, and I'll have to tell them everything again. I mean, that makes me so mad when it's called hitting a wall, when you hit an AI wall. Well, last night I saw something that Claude has a new something out. They used to have Sonnet, a new version, and now they have something called something else. But also in part of that feature is Claude is now able to condense his own conversations. Yesterday, I kept getting messages. It'll take 1 or 2 minutes and they will condense the conversation, the previous conversation, zip it or something, so you don't have to hit a wall and keep going. That's the first time I've hit a wall here. But the only reason I was just trying to show you what we did this morning. So look at this, diversified divas dashboard. I'm just trying to, if they could ever make this work. I mean, this is what I wanted. I said, look, I don't want 4 sheets. See, right now I have this sheet, I have this sheet, I have this sheet, and I have that sheet. And I have to open them all separately this morning. So I got up early, and I also have this sheet. I want all 5 of them to exist in the same place. And so I got up early and I got them trying to do that and make it better looking. So here's what they gave me. They gave me this, but you still have to hit view full report. And then from there, you have to hit view full blocks report. And then they take you to that. That's not what I wanted. I mean, I want it all to exist inside of here. Like I say, that AI is helpful, but it's just 1 step forward and 2 steps back. I mean, for me, it is, because I could either work on AI all day or work on videos, and working on AI doesn't get any views. My views have gone down lately because I haven't made any new videos, and the videos I have been trying to make suck because of the AI, or because I'm just, this is good, but this stuff right here, I mean, changes in positions. This can't be brain surgery. I mean, changes in positions. I mean, yesterday we had Palantir yesterday. We had Robinhood yesterday. These are not new stocks added. I don't know why they can't get that right. But so I try to get up and do a show. Then I get halfway through the show and realize the information's bad anyway. And that's why no one watches it. So I just need to scrap that show and find a different show. But yeah, like I say, I wouldn't watch this content. I mean, I like my lives all right because you guys make the lives good, because you guys give me stuff to talk about. But this, I mean, I don't know why I can't make a decent show. There's 30 people watched it. 180 people watched it yesterday. I mean, it just is the worst. I'm trying to make this into a daily show, but I need help from AI, and the AI just is wrong every day. Yesterday, anyway, I just don't understand why they can't put this all on one spreadsheet. Or I already have a problem opening tabs. I don't want 197 tabs open. I don't know why this all can't exist here. And then look here. So if I go click on it, okay, this is cool. They show you new today. I mean, I love this. I love this. But then why does view full Alti report take me over here? And that's not even right. This is why I was going back on them today. And then the view Alti report, they give me a report from 5 days ago. And so I ran out of room talking to him because he's incompetent. And I kept having to say, no, that's the wrong report. And they kept having to go back and forth. So, I mean, I get mad when they run out of room. They run out of room because they aren't following my instructions. You see what I'm saying? All right. Fish cut his dividends in half still can't pay the bills, just holding more, and can still pay your bills. Thank God. Okay. Just holding more cash for any uncertainty in 2026. Do I want to be a speaker? I'm kind of in a bad mood today. No, I want to go work on my videos. My channel's going straight down the dumper. I'll listen to it, but yeah, I need to work on new videos. I have like 5 videos I need to record. It's another story, but anyway, hey, JT, what's up? Can I compare a QLDY against triple Q weekly, monthly high yield? Well, yeah, I have I definitely can. I mean, I compared QLDY since the day it came out, but I was trying to make a show out of that, and that show sucked. No one watched that show, so I quit doing that. But now I'm trying to, but whenever K-Yield and ULTI came out, I started comparing all of them since the day they came out. And yes, I absolutely can. And here it is. It's here somewhere. I guess it's right here. Well, no, it's not right there. It's somewhere in here. But yeah, I look at it once. Here it is. So here we have it. So since inception, Q yield is, and this is the month of November because these other ones came out the last day of October. So this is the only thing I have tracking, or a QLDY. And it's only down 3.3 where the Qs are down 2.6. So, I can definitely do it that way. I mean, we can do this. I was trying to get away from having to do this so much. But that's why I'm trying to build content with graphics and stuff that looks better. But yeah, we could do something like this, but yeah, this is impressive. I mean, QLDY is impressive. It hangs closer than probably anything I've ever seen. And it's because it uses lightning spreads. Lightning spreads, in my opinion, are better than, it's a better technology than covered calls. Everything should go to lightning spreads. If I was the president, I would mandate that all ETFs had to use lightning spreads. No more capped upside. If you had a capped upside, I'd have you arrested and prosecuted for treason if you're an ETF that's running a capped upside. But yeah, so look at this bad boy. I mean, this is since inception. It just follows right along. I mean, it's just, there's no free money, so it's not going to be ahead. There's no such thing as free money because it does a little better on the upside. So the give up is it does a little worse on the downside. But the opposite is the opposite of a covered call strategy, which does a little worse on the upside and a little better on the downside. But yeah, I would mandate that all ETFs had to have uncapped upside. You have to use lightning spreads. But let's compare it with the capped upside ETF from the same date. Well, first of all, what was the date? November 18th. Okay, so let me slap a capped upside ETF in here. What about QDTE? Well, that's not capped tonight. What about triple QI? This one's definitely capped. And let's run it over the same time. Or I guess we could just run them against each other. Triple QI against QILD. But yeah, the lightning spread is just a better technology. Oh, that's not a good look for QI. Oh, it was QYLD. QLDY. QYLD is from Global X. It sucks. QLDY is from Defiance and it's badass. Yeah. All right. There you go. So these are two funds from Defiance, one with totally capped upside and one with uncapped upside. You really, though, the one with uncapped upside does better on the way up, but the one with capped upside does better on the way down. There's no free money. I mean, if you knew the market was for sure going down, you would definitely want triple QI. If you knew the market was for sure going up, you would definitely want QLDY. I just think since the market usually goes up, QLDY is I prefer it. But yeah, that's a great look right there. That's a great look. It's really a good look for both of them. Let's compare it to triple QI. This one's totally capped, but they just capped themselves in the monthly time frame, which is less efficient of a cap. So so totally capped in the monthly time frame is fine, but I wouldn't let anyone totally cap in the daily time frame. So looky here, yeah, triple QI is beating QLDY right now, but not on the way up. I mean, QLDY is a monster on the way up, but it gets a little bit of extra on the way down. So hopefully that's what you're looking for, Jim. If you're you may even want to watching my lightning spread show. And I'm sorry I quit it, but I was just trying to merge it into that QLDY is cool, but there's no reason we can't look at it at the same time we look at WPay and ULTI and ULTY and all the other ones. I think it's more engaging to compare it with the whole group. But anyway, yeah, it's a good looking fund. Yeah, good point, Froggy. Hit that like and subscribe. Yeah, Dan, thank you. Yes, getting that cash on in my Fidelity. Well, I know it. I know the channel's going great and stuff, but I'm just spinning my wheels lots of times on the AI because I'll spend a lot of time making some AI content thinking I'm going to make it's going to end up in a better video. At the end of the day, an influencer is supposed to make videos. And then, but I just spend all my time making AI and then if the end product isn't even better, sometimes I wonder if I'm better just not even messing with the AI and just writing a video script is all I'm saying. I mean, I like what's going on with the channel, and I appreciate the compliment, Froggy. Hood is popping today. Heck yeah. If we get more interest rate cuts, I'll hold cash next week. I'm just having a hard time getting. I want to get that show. I want to get a show started that's based on the Diversified Diva spreadsheet, and I want to show the same thing that ETF Delta is showing every day. What's changed? All I want to show is this: they've added this and they subtracted this. And then I can look at the option positions too. And I want to make it 10-minute show. And it's just going terribly. Anyway, makes me wonder if YMAX will get an update too. Yeah. Did you guys see Misty split? I thought Misty already split. Was Misty not part of that big split that YMAX did? I just saw something today. Yeah. And I'm making content on that, but I just haven't done it yet, Nick. The gold and silver. They've also bloxified those. What X Funds is a lightning spread company. They've turned that gold ETF, the silver ETF, just going to look just like blocks, except instead of having Bitcoin stuff, it's going to be the same thing. It's going to own some gold directly and some gold ETFs, just like blocks owns Ethereum and Bitcoin through ETFs just directly. And then most of the portfolio is going to be stocks related with lightning spreads on it. Yeah, that looks awesome. What about the nuclear one? Or what about the weapons? The one called nukes and one called weapon. Heck yeah. Heck yeah. Hey, Ethan, thank you. All right. So QDT, XDT, and Maggie are currently doing better than QLDY. Really? Okay. Really? Because Maggie, every time I check it, or the last time I checked it, it was getting spanked by YMAG. Yeah, I mean, that's a bad look for Maggie. It's a terrible look for Maggie. And then also, I know that people like Maggie and stuff, but and then also you could, then of course, GPTY's spanking all of them. But anyway, yeah, GPTY is a monster. I mean, let's make the case for Maggie. What's the bull case for Maggie? Well, the bull case is that the NAV's steady, but the NAV's actually up on GPTY. The NAV's probably down on YMAG, is why probably people don't want it. People just don't like yield max. I get it, but it's a case by case basis. And really, it's not really yield max. It's what the underlines are doing. But these two have the same underlines. So this is a fair comparison. I just don't see the case for Maggie here. Maggie also pays a lower dividend. I mean, So it kind of surprises me that Maggie would be beating, if it can't even beat YMAG, it surprises me that it would be beating QLDY. Because QLDY is, out of the stuff I follow, it's the best, it's the best looking one out of those 10 funds that I follow. Besides the Qs and the SPY. Yeah, I mean, it's not beating them on this chart. I mean, it's close, 1.6 to 1.3. I'm trying to make a case for Maggie, though. It pays 3 on. I mean, it looks like the dividend's about the same. It's only like a fifth of a year, so very small sample size, but it looks like the dividends may be the same, or it looks like Maggie might have a slightly higher dividend, might be the case for Maggie. But if you like to get paid twice a day and you like to do better in a bull market like I like to do, I think QLDY's looks better to me. I mean, but let me check XDTE, or let's put it up here. But yeah, I like the idea of Maggie. When I read the prospectus, I was like, this looks like a cool idea, but when you get spanked by YMAG, I mean, so let's see here, XDTE. Okay, true. Okay, so XDTE, yes, definitely they are beating it, 2.5 to 1.6. Good call. And so, QDT is probably beating it also. Small sample size, but if we're going to give these guys credit for beating Maggie on a small sample size, we also have to give QDTE and XDTE credit for beating QLDY. Yeah, I didn't realize that. Thanks for bringing that to my attention. I bet you guys didn't realize that Maggie was getting spanked by stuff though. But like I say, I didn't realize. To be fair, I didn't realize QDT and XDT were doing well against QLDY. Thanks for bringing that to my attention. All right. Ban all caps. Yeah, exactly. Uncap the upside. Hey, Summit, what are you doing? Alti and YMAX is paying me at least $1,000 a week, but then Alti dropped below 500 a week, and that woke you up. Yeah, I hear you on that. I think QLDY is Defiance's best ETF. Oh, yeah, absolutely. I think it's their best ETF. I think it's one of the best ETFs out there. Like I say, I mean, on this graphic right here, we look at this every morning. These are darn good ETFs. SPY and Qs are good, but Chippy's good. GPTY, you just saw GPTY. It's spanking Maggie. It spanks everything. It beats everything. It beats all the other ones that people think are safe, and it beats it on yield also, and on total return. Since inception for the quarter, it doesn't matter. So it's a good ETF is what I'm saying. But so is K-Yield. So is WPay. I don't think I get any argument from you guys that those are good ETFs. I know no one likes that one, probably, or that one, but a lot of people like blocks also. So I'm saying these are some pretty stiff competition, and QLDY is throttling those guys. Now, I guess the downside to QLDY is it pays kind of a small yield, and that may be part of the reason it's performing better. The high yielding one is ULTY and LFGY, but WPay is also pretty high yielding, and Chippy. But yeah, so I just compare it to those 10 every day. Let's go look and see, because the market may have moved since last time we checked. Let's go check the source spreadsheet, and let's look over here at the daily percent change and see what's going on over here. Well, they're all up now at this point, it looks like. Look at ULTY up 0.75 of a point. Look at blocks up 1.8, but look at K-Yield. Good job, Howard, up 2.3. WPay's up 1.6. QLDY's up 1. I mean, on a one-day basis, it gets beat on some one day. Obviously it gets beat on a one-day basis, but when you look at rolling total return, it's behind the Qs and the SPY. It's the next closest one. It's, this is a bad display, but anyway, yeah, but I really like QLDY. And I really like YMAG a lot better than Maggie. All right, so Use YMAX to reinvest in other things. As soon as total return gets crappy, it's gone. Heck yeah. Thankfully, they really look to be trying to fix all. Yes, absolutely. Absolutely. I think so. I think that QLDY 2 times a weekly is a powerful compounding effect. Heck yeah. I think Defiance is target fund, SPY T, and triple QT. Well, that's actually a good case. Those are probably the other good ones from Defiance. But to be fair, those ones get spanked by XPay. And I mean, those ones get spanked sometimes by ones that they shouldn't, in my opinion. But let's run, well, for instance, like let's run XDTE. I would think that SPY T should beat XDTE. And last time I checked, it didn't beat it. It's darn close though. I mean, it's darn close. But the problem with that is XDT is doing to SPY T what YMAG is doing to Maggie. It's beating it in all phases of the ball game. It's this one. XDT pays a higher yield and is doing better in total return. And the NAV upside's about the same. I mean, they both have decent NAV upside. One went from 1680 to 1796. One's up $1 on 16, and the other one's up $1.50 on 40. They're very similar. But yeah, so let's compare. Now let's compare SPY T to, or let's compare triple QT to QLDY and see how those do against each other. Well, that's close right there. When you can't even tell which one's on top, QLDY is on top, but just barely. But the thing about QLDY, it's like I say, if you knew the market was going down, you wouldn't want QLDY. But it's a bull market fund. Look at it pulling away in the up market. Yeah, but I think I'm with you. This probably the second best Defiance funds are triple QT and SPY T. But I would agree with you. The other ones, the other Defiance funds, routinely get spanked by the competition. So I would agree with you that the other ones are no good. But they've got a winner on QLDY, in my opinion. What do you mean? How should you look at the lightning spread? So I've shown shows on it before, but it's kind of technical. I mean, I can put it in option strat or whatever, but all you need to know about the lightning spread is when you sell covered calls, you cap your upside. Everyone knows that, even if it's a covered call spread. So a covered call strategy might get 50% of the upside, but 70 or 80% of the downside, something like that. And that's the problem with covered calls, and that's the reason why people don't like them. So what they've done is they've done, it's not a covered put, but they've done a different strategy where you get 100% of the upside and 100% of the downside pretty much. But it's like 100% of the upside and 105% of the downside. That's why I'm saying if you knew the market was going down, you wouldn't want a lightning spread. It adds to a little extra downside, but you get 100% of the upside, unlike, and that's why QLDY hangs really close to the Qs. So I don't know if that helps, but it's just a totally different technology. The other thing is they only have it right now in blocks, in GX, and QLDY. There's only 3 funds that are doing it. So, but I think it's going to get more popular. But anyway, ULTY was one of your last. You dumped it when it hit 550. I think lightning spreads is uncapped upside. And yeah, did I describe it right? I mean, it really gets it gets a little bit more on the downside because it runs through the put spread strikes. But basically, it gets the same upside and downside as stock, or very close. I didn't see the curve file to do a copper ETF. That's good information, Randy. Thank you for being here this morning, Randy. Appreciate it. Red, okay. So even though it listed funds above. Oh, okay. I see what you're saying. Yeah, QLDY's, I wish I had more of it. It's held up a lot better in this pullback than any of these other dogs I have, like blocks and ULTY and K yield. I mean, it's held up like twice as good as those other dogs I have. Yeah, YMAG is on your list. Well, I mean, I don't know if YMAG is that. I mean, you know, but everyone loves Maggie, and it spanks Maggie, you know. So, and I think it's a fairly fair comparison because it's the same stocks, you know. So I don't know what Maggie's deal is, but. And not only that, the really bad look is, like I say, YMAG also pays a higher dividend. Mayor thinks the nuclear trade is highly speculative. It's tied to AI server thing. Yeah, it's expensive, and those small reactors don't even exist yet. QLDY is doing better than Maggie. Okay. Yeah, I guess, I mean, Maggie's holding up better in the down market. Okay. Now, does Maggie do total return swaps? Maybe they're doing a different technology. I'm sure there's a use case for Maggie. Maybe I'm missing it. I think I looked at the prospectus, and they're actually just buying their own. There's an ETF called MAGS that's Round Hill, right? And I think they're just buying MAGS and selling MAGS options. But whereas YieldMax is buying Google and selling Google options, or doing Google synthetics, I guess. They aren't buying Google, but whatever. Maybe Mag's options aren't quite as liquid, and maybe that's why they're giving up a little bit, or something. I mean, that's the only thing I can think of. Maggie gets a rep for having relatively steady NAV, but it has a lower dividend. And like I say, things can have too steady of NAV. Things can be super steady and they underperform. I mean, you know. So anyway. Gold and silver moving up today. Well, thank God, because those have been in the dump also. I bought K Gold and K Silv, and they haven't done anything since I bought them. You hold Maggie and QLDY. You like them both. Okay. And you have both also. Same. Silver's almost 53 an ounce. Well, wow. What does Joe say? Joe says QLDY is great. Took the least amount of damage in my portfolio and everything. Yeah. Me too. Like I say, it's holding up better than any of those other dogs I got, like K Yield and blocks. You guys seriously buy the Mag 7 at these levels? Is QLDY better than ULTY? I mean, it's been performing better, I'm sure. You know, that's not really an apples to apples comparison. The apples to apples comparison on that one is QLDY better than Vibe when it comes, or is Alti better than Vibe? Round Hill's coming out with their own type of meme stock, you know, fund called Vibe, and that's going to be more of an apples to apples comparison. But yeah, I would guess, depending on the time frame, I would guess ULTY has been in the dumps because it's Bitcoin. Bitcoin's off 30%, and it's like 70%, you know, correlated to Bitcoin. So, and also QLDY has only been out since September. If we could go back till April, I bet that ULTY would be spanking QLDY whenever Bitcoin's price, you know, was up 70% and you know, and Alti was doing great. But yeah, Alti is sucking lately. Alti is definitely sucking lately. All right. Mayor, those small reactors have existed since the 50s. The technology is there. They just need to be deployed. All right. XDT is beating it, but not QDT. Yeah. Marcus, Russians have the same, just the payroll for the security is huge. All right. All right. I'm glad I didn't buy too much ULTI. I'm still down over 30%. Heck, I mean, I bought K Yield the day it came out, and I love Howard. You know, it's really not Howard's fault. The market's been terrible, but I'm saying it's down 10%. I mean, I bought it more of it, not to time the market, but more of because I believe in the concept that he's doing, and it'll come back. ULTY also wasn't hedged the first couple of weeks. Now they've turned everything into callers. Same strategy ULTY has, which means it shouldn't have any more huge down days. Like they did the first couple of weeks. All right. Brad did an interview with the YEM new guy. Yeah, Mike, and grilled him a bit on ULTY. The guy promised it'll get better. Okay. Yeah. Heck yeah. Heck yeah. I hadn't seen that interview yet, but if they stabilize NAV, I would grab a few shares. I'm just telling you, the NAV's not going to stabilize. It's not designed to be stable. That thing yields 80%. It means the underlines have to be up 100%. And so it means in a period like April through March, where the underlines are going crazy, it can have stable NAV. But as long as it pays 80%, it's not going to have stable NAV. Nothing that pays 80% has stable NAV. It's just not in the cards. And that's why I made that video the other day that, you have to get the underlying when you any ETF you buy, if it has a 50% yield, you're betting the underlying is up 65%. If you expect a stable NAV. So if you buy something with 100% yield or an 80% yield, it's not happening. It may happen for a while, but I mean, you're betting on the price of the underlines in ULTY to double every year. So, when they say get better, they aren't trying to. I mean, they're trying to what they've tried to do, and what the guy, it's Mike Coe, what he's talking about is they've tried to put in stocks that are going to pay lower. So what they're going to do, they might fix Alti by making it go from an 80% to a 60% yield or a 50% yield. And at a 50% yield, the underlying portfolio would only have to be up 65% in a year to have stable NAV. That might happen. That might happen, but you're still betting on a bull market. That's not going to happen when the market's getting crushed. I mean, if you want a stable NAV, get something with a 15 or 10 or 15% dividend, because then you're only betting on that underlying to be up 1.3 times whatever that is. But what I'm saying, that guy Mike Coe's a nice guy. When he says they're trying to fix ULTY, maybe they're trying to make it have a little bit lower yield so it doesn't start with such a headwind. But anytime something pays 80%, stable NAV's not in the cards. I mean, would you guys say Coney has a stable NAV or anything? Look at any triple digit fund out there. It's not going to have a stable NAV. Does anything from Granite Shares have a stable NAV? Yeah, KQQQ does have a stable NAV, and they pay 9%. So their underlines only have to be up 12%. So they can even have some NAV growth. If you only pay 12%, you can even get NAV growth in a bullish year, because if your underlines are up 20 or 30%, you're sailing into the headwind, but the headwind's not pushing you backwards. When you're sailing into an 80 or 90 knot headwind, which is what ULTY is doing, or anything that pays 80 or 90%, they're never going to have a stable NAV. They aren't trying to have a stable NAV. Stable NAV is not on the cards. Fish, I'm looking for Maggie for Monday pay. Okay. Well, yeah, I could see a case for that. What day does YMAG pay on? I mean, it looks like you're giving up upside with Maggie compared to YMAG, but there's always a trade-off. If maybe it pays a lower, you'll do better on the downside or whatever. Roundhill's a good company, but I'm just saying Maggie's it's an embarrassment to get spanked by YieldMac, to get spanked by YMAG, in my opinion. Got a relevant growth ETF for you guys. POW, yeah, POW is a good one. I've heard of it. I haven't done a review on it yet. Let's compare POW to QLDY. So PLW wasn't down nearly as much. What did I'm trying to think. Is it defense contracting or something with veterans or POW? I'm trying to think what the underline on that was. Anyway, put it in here, Marcus. Do you think Mr. could be at the bottom? I don't know. What do you guys think? Yeah, ULTY's purpose to pay out. A lot of the NAV will never be stable. My rule of thumb, that's why I'm trying to make something simple. Just look at the yield. It doesn't matter if they do lighting. It doesn't matter what they do. If they're paying a yield and the yields, whatever the yield is, that's the main thing you can know if it's going to be stable or not. Anything that pays more than 50%, even on a 50% payer, even if they reduced ULTY to 50, even if they reduced it to 40, you're still betting on the stocks in that portfolio to be up 50% a year, which could happen in a good year. I mean, but it's never going to happen if the market goes sideways or down. It's definitely, it's for income, but it's also for generating income in bullish environments. If you expect a stable NAV. but yeah, they can only decrease the decline. And that's what I was saying too. I think that maybe adding American Express and everything will decrease the decline, but they're also going to decrease the dividend. I bet there'll be some people that sell it because they actually were using it for the dividend, but then they're listening to the people that want a stable NAV. It's just not going to happen. I mean, anyway. Bought KYLD and ULTI October. Yeah. Okay. I did too. That's the day I bought K yield too. Or I think I bought it maybe the next day, but I got it right at the beginning. And K yield's only down 11.5. Yeah. No, I know it. It's doing way better than ULTI. I would never say that, but I'm saying it's not doing as well as QLDY. It's down. The index is down like 3% since then. The Qs are, and K yield, as good as it is down triple the index right now. Yeah, I mean, it's definitely doing better than ULTI. ULTI came out and they were totally unhedged. They were running a full upside and full downside, kind of the blocks plan. And they did that for the first week and a half, and it destroyed their price. And I think people were griping about it, and then they started putting on hedges. But now they have everything hedged. You're hearing rumor strategy is having issues, really. Well, if they get I hear so many different rumors. I hear rumors are getting dropped from the MSCI, but then I hear a rumor that they're going to be added to the S&P 500. I don't know what I can believe. There's so much BS going around about. Yes, I agree, Mark. And I would even go a step further. I recommend choosing something that pays less than 20%. But yes, so that would include Cornerstone, and that would include XDT, and those are really good funds. But I would include other ones in there too. But yes, KQQ, QQI, T-SPY, TDAC, get something that pays 15% or less, and that's going to be your best chance at stable NAV. Their NAV's going to go down too in a bear market. I mean, but or even in a sideways market, even those will lose NAV. But in your general trending up market, those should be great. I agree 100%. Yeah. You think ULTY should go back to monthly? Okay, that's why you bought Winter. Yeah, I get you. I get you on that, Fish. I mean, that was a good move too. I'm jealous of people that got Winter. Let's look what the market's doing. Boy, that's a good look. They've taken out. I mean, they're on a new high for the day. The SPY's probably taken out that previous high from that gap up, the gap and trap from the other day, taking back the trend line. Yeah, and the SPY's taken back that gap and trap. Or no, here was the gap and trap. It was last Thursday. Anyway, whatever. Everything's looking good. Everything's looking good. Your only concern about Cornerstone is they've dropped 90% of that. Well, they're an income fund, and they've been around 100 years. I mean, and they pay 17%. So Cornerstone, it works the same. The math works the same on all of them. It doesn't matter. If they're paying 17%, that means they're betting on their underlines, and they don't really fall an index, but they're betting on their underlines to be up 17 times 1.3. So that's like 25% every year. So you have years like 2022 where it doesn't meet that. And you have other years where it goes up, but it doesn't meet 22%. All of those years will cause their price to lose ground on the underlying. It's just because you have to remember they're paying 17% a month. Or 17% a year. They're a 4-star fund. But yeah, they've just been around that long. I mean, I think, CLM and SPY. And let's go back and let's go back 10 years. But any year that the underlying doesn't go up at least 17 times 3, which is 22, 24, something like that, they're going to lose ground on the SPY. But the SPY doesn't pay you 17%. So then this is, I mean, even as good as Cornerstone is, it's, if you reinvest, you do a little bit better. But if you're taking it as income, that's why it doesn't go up, because you're cannibalizing part of your investment. I mean, that's why it loses ground at the SPY. But I think Cornerstone's probably one of the steadier ones. But yeah, it doesn't matter what it is. You just ask yourself, anytime you get a yield, something that pays a yield, if you have something that pays a 10% yield Ask yourself, can this underlying go up 13%? If you have something that pays 100% yield, say, is this underlying going to go up 130%? That's all it is. It's that simple. It's that simple. Oh, POW is global energy supercycle, grids, nuke, okay, etc. I need to watch my ULTI holding this. It's pretty bad. I'll just send you the spreadsheet. You don't want to watch it. It must be seriously tied to crypto. I'm making it better, but don't go watch this morning's video. It was bad. I can here we can look at their holdings real quick. Here's their holdings. So they have Cipher. Yes, that's crypto. I think Iron is crypto too. They have Credo. I don't know what that is. Applied Digital, TerraWolf. They have Bloom Energy, which is nuke power, but that's basically tied to crypto lately. AST Space Mobile, Astera Labs, Galaxy's crypto, right? Core Scientific, Bullish is related. Rocket Lab, EOS Energy, that's probably a nuke play that's also related. Lucid, is Lucid the car company, Lucid? Anyway, Symbotic, Oklo, USA Rare Earth, Sunrun, and Nano Nuclear. It looks like they have energy and tech. But yes, they are highly, and they were unhedged for the first 2 weeks, and the market got crushed. So the market got crushed. You heard that ULTI doesn't. Yes, it doesn't have good downside protection. I would agree with that. Now lately they've added it, but it's a very aggressive fund. Think of ULTI like blocks. Blocks doesn't have very good downside protection. I mean, but it should do really well on the upside. So it's more like a blocks. Yeah, well, they burned themselves. They should have had callers on the whole time. I don't know what they were thinking. Once they dropped 20%, they put callers on, but by then a lot of the damage was done. But that is what I cover in that morning report that I'm saying it's not good. It'll get better, but that's what I look at. And that's why I built this sheet. I go here and look at their option positions, and I say, okay, they have 4 legs on most of their option positions. But then they have, which one is this? ULTI, okay. But then I say, like, AI is hedged under 14.5. They can't lose any additional money under 14.5. Astera Lab is hedged under 135. Applied Digital is hedged under 23.5. AST Space Mobile, they sold calls and they sold some other calls. That one is unhedged. AST Space Mobile is unhedged. Bloom Energy, they have on that one's hedged, but their hedge is pretty far away. I mean, they can lose, but not under 89. Well, let me look here. They sold an 89 and bought a 102. That's a big call spread. Well, that's not a call spread. It's a debit call spread, a bearish call spread. Well, they did something different in this one. Bullish is hedged under 43. Cipher is hedged under 4. Cipher's not hedged. Coors is unhedged. It looks like they've taken off some of their hedges, which is fine now that the market's going up. Like Galaxy, for instance, they sold calls and bought other calls. They just that's the yield max strategy. That's unhedged because they have stock and there's no puts in Galaxy. Yeah, it looks like they're back to unhedged. I don't know. It looks like they're back to unhedged. On Astera Labs, though, they are hedged. They're hedged under 130 because they have stock and then they sold options. They sold calls, but then they bought twice as many puts at the 130 strike. They cannot hold the bag on Astera under 130. So they're hedged on some of these, not hedged on others. AST Space Mobile, they're hedged under 47. Oh, and here's part of the problem too. It's another AI problem. AI's, well, AI wasn't putting all the trades together. Okay. No, they absolutely are hedged on Bloom Energy. They separated the trades. They're hedged under 76. On bullish, bullish is unhedged though. No, I take that back. Bullish is hedged under 36. Cipher is definitely hedged. CORZ is hedged at the 13.5 level. When I was saying just a second ago that some of them weren't hedged, it was because the tickers weren't sorted right. They're hedged. They're hedged. Hopefully Santa rallies, it's already started. We have the Thanksgiving turkey rally starting right now. Heck, it's time for it's time for the, I'm going to go watch that Spaces. I can't believe it's already 11 o'clock. This has been a good one. I appreciate you guys. Sorry I'm in a grumpy mood, but I just get mad when AI doesn't follow my instructions. Max, why did ULTI go back into BE? They got burned on that right out of the gate. Yeah, good point. Good point. I don't know, but I would say more of their burn had to do with they didn't have any hedges on. They got burned on everything. They introduced themselves and the market dropped. The market was in a huge bear market and they didn't have anything hedged. But at least on Bloom Energy, we'll look at this really quick. On Bloom Energy, they have 4 legs, and this is the way all their positions are. And what they do is they sell a call at what strike is that? 89, and then they sell a put at 89. So they sell an at the money call and put. That's known as a straddle. But then they buy a call that's out of the money. That's to uncap part of the upside. So that's 3 legs. But the 4th leg is how you can tell if they're hedged, if you download their holdings. If they're 4th leg, and it usually is a put, and it has twice as many, that offsets that totally stops the bleeding under 76. So they aren't going to let it hurt them anymore. I don't know why they put it back in, but at least they can't hold the bag under 76. They're basically doing a variation on the ULTY strategy. And ULTY, for all its other faults, does do well on big down days because of those puts. It does comparatively better on big down days. But you can see that's the case on anything. On bullish, they have 4 legs, 2 calls, 2 puts. But you can just look over here, 74, 74, 74, and then 148. The key is they have a double long put leg. And so that means whatever strike that put is, that's where the bleeding stops on bullish. They can't get hurt under, 36. Now, sometimes they do a 3-leg variety of the strategy, but still they can't get hurt under 12 on Cipher. On Course, they have the 4-leg version of the strategy, when they have double puts at 13.5. So Course, they can't get hurt under 13.5. Credo, they have a 3-leg version of the strategy, but they still have puts at 118 that will stop the bleeding right there. EOSE, they have a double long leg of puts at 11. Galaxy, they're limited to 21. They can't lose any more under 21. So they're doing better is all I'm trying to say. They're doing better. They had an outsized position in BE. Okay. And like I say, they've always had the 4-leg strategy on, but their 4-leg strategy used to have even legs. So, it used to have like -10, +10, or -10, -10, sold call, sold put. Then an out of the money call would be +10. And then an out of the money put would be +10. And so that's basically unhedged because they also have the stock. Anyway, but once they make the out of the money put leg +20, that stops the stock too. That stops the stock. The 4-leg overlay has always itself been hedged. The overlay itself, with 4 legs has the put, so it can only lose. The overlay can only lose, but they have the stock, and the stock was just running straight down. So if you want to look at this yourself, if they have the double leg of the puts, you can just look down here and you can tell they're hedged. 96, 96, 192. You don't even have to look over here. 33, 33, 72. Or 66. Whatever that position is, it's hedged. That's just the hallmarks of it. Anyway, I'll make that morning show better. Maybe check out my morning show tomorrow. I'll try to make this graphic better and that kind of stuff. Yeah, 90 minutes, beast mode. Heck yeah, heck yeah. I'll just tell you, because it's either talk with you guys or go talk with AI. And once I get out of here, anyway, I'm going to go do the Wolf Financial Spaces right now. And I'll talk to you guys at, what time do you guys want to get together today? Does the market really close at 1? Because if it does, I really probably don't want to do a live stream at 5. I'll probably do a live stream like earlier in the day to get it over with. So maybe if the market really closes early, let's get together about 3 or 4. All right. Hey, I appreciate it, Zombie. Thanks for being here. I know you have a first name and I forgot what it was. Is it Jeff? I forgot your name. Oh, it's a regular day today. Okay. Well, we'll be back. I'll be back at 4 o'clock then. Probably 4 my time and 5 your time. Okay. I thought for some reason, I thought we closed early. Maybe it's Friday. That's what it is. On Friday, we'll have an early TGIF show. It'll be like at 3. That's right. That is totally right. All right, Mark. Well, thank you for the information. Thank you guys for being here. Go over and check out this Wolf Financial Spaces. I will talk to you guys. I never did get an answer from Zombie. Is your name Jeff? I think your name's Jeff. Well, that's Andre. But I try to memorize you guys' first names, and Homeless Zombie told me his first name, and I forgot it. Anyway, all right, guys. Well, I'll talk to you guys later. No, it's not Jeff. Gosh darn it. I'm sorry. Anyway, well, Jake or something. I knew it for a while. Yeah, you're welcome, Fish. I appreciate it. Never gave my name. You like Zombie. All right, you're Zombie from now on. Perfect. All right, Zombie. I'll talk to you later. Have a good day.